Hi, Todd Smith here, CEO of 360 Converge, joined with Steve Greenfield, CEO and founder of Automotive.ventures. He's just newly back to Atlanta, so I got the opportunity to sit and have a good conversation today. Steve, how are you doing?
I'm great, Todd. Thanks for having me today.
Awesome, man. So let's jump in, man. So what's going on with you? So I know previously you were TrueCar. What was your exact position there? Were you...
So I was in charge of strategy and business development. In that case, it was acquisitions,
Okay.
and spent about 2 years out there on the West Coast.
You got a little of that West Coast. Did you do much surfing or skating like Chip, or?
You know, I hate to admit it, I lived literally 2 blocks from the Santa Monica Pier and did, take the opportunity to jog along the beach almost every day.
Yeah.
In 2 years, you're going to hate me, I never dipped my toe in the water out there.
Oh, man. Look, from a lifelong surfer, you're killing me, man.
I know. Well, it's funny because, I grew up in Toronto and I got exposed to enough cold, but 20 years ago, I moved down to Atlanta and I had enough of the cold, man. If I don't see another flake of snow in my life, I'll be happy. And cold water and I don't get along. And all I ever heard from people was like, oh, the water's really cold. I'm like, well, why would I want to go out in it then?
Yeah. I mean, listen, you just throw on a wetsuit, man. It works.
There you go. Shame on me.
Out there.
Shame on me.
You're newly back in Atlanta.
Yes.
You're working on your automotive ventures. What's the background and what are you thinking about with this venture now?
So I literally left TrueCar, not 2 weeks ago. 2 weeks ago today, actually. So I'm back in Atlanta. Happy to be back here. I was here for 18 years, and I originally worked for a division of Cox Enterprises, and moved down from Toronto, where I'm from originally. But glad to be back. I mean, this feels like home to me. I mean, I just really love this city. Trying really to focus on 2 things, right? One is I've always been intrigued and loved the whole automotive space and loved going to NADA every year, see the new technologies that are out there and spend time with the entrepreneurs to understand how they came up with the idea, et cetera. So I'm focused on trying to help automotive technology entrepreneurs either raise money or when the time's right, help them sell their businesses.
Okay. So these are 2 great things. Now, interesting marketplace for that right now, right? Because you're dealing with 2 difficult sides of that, right? So raising money today, I assume is going to be very difficult. I know I just had my, what I would consider my road bump in that. I know a lot of other people have experienced that as well. And on the other side, selling it's hard to sell businesses with, stagnant revenue, or who knows what the future is going to come back to and when. So that being said, and I'd love to talk a little bit, what do you think is going on in the market let's talk about some of the existing tech in the space, and who do you think are going to be the biggest winners out of this time, and where do you think the impact is going to lead us?
All right, I think it's about 7 questions, so I'll try to unpack them. Yeah. Start at the beginning. I think, just keep me honest here. I would say, I think, obviously, it starts with the consumer, right? So consumers right now aren't spending money. Everybody's holed up at home. High unemployment. The new unemployment numbers came out today, and we have unprecedentedly high unemployment right now, and who knows how high that's going to get before it starts to level off. Right. So there have been furloughs, and a lot of folks hopefully are getting back to work now this week with the PPP funding starting to come through. But despite that, there's going to be a lot of folks who are unemployed, and or even those of us that are employed are going to be a little bit more cautious with spending money, and definitely not in the mood to buy cars right now or necessarily have their cars serviced, because cars aren't being driven and putting miles on them and having service needs. So I would say we starting there. Then there are the dealers that are able to be open right now are feeling that immediately and feeling reduced demand for services, be it on the variable side or the fixed side. And a lot of dealers aren't able to be open right now. I was looking at a map that came out, I think yesterday, from JD Power in terms of a heat map of which states were allowing dealers to be open, period. And there's a lot of states that aren't allowing dealers to be open, period. So having said that, now moving to the folks that service the dealers and get paid by the dealers and OEMs, but mostly dealers, the health of them are challenged. And very publicly, you've seen the third-party marketplaces provide 50% rate concessions for the next month or so to dealers. In a lot of cases, I've heard anecdotally, as I'm sure you have from dealer friends, pausing or just canceling vendors outright when they're non-critical. And if a dealer's closed right now and they're forced with, firing or furloughing employees, they're not, going to be paying their vendors because they're not going to have the wherewithal. They got other issues to worry about. Yeah. So all of that then means, downstream from the dealer's health, the dealers are downstream from the consumer's health, the vendors are downstream from the dealer's health, and then the vendors are sitting there and they're having problems. So I've known, a couple of entrepreneurs I talked to this week, luckily enough, got PPP funding early in the week, have their employees now back to work full time, and are able to be creative with the solutions they're having them work on because there aren't a lot of dealer customer demand right now. But I think, in this environment, so then fast forwarding to the other part of your question, what was, I thought, going to be a year where we were going to have a healthy, robust economy, the funding spigots would be open, being able to help entrepreneurs raise money in a healthy market. And on the flip side, exit either to strategic buyers that were looking to, pick off certain technologies and put them into their portfolio, or financial players. I think obviously it's changed, right? So I think that the conversations I've had over the last 2 weeks with entrepreneurs kind of fall into two buckets. One is, guys who really need to either raise money or sell immediately because they're in a crunch. They were in a crunch before, and really right now this shortens their runway. The fact that they aren't collecting as much revenue from their customers, which are typically car dealers, it means that they have to come up with something creative quick. And that might mean, trying to figure out if there's well-heeled investors out there. The pendulum has swung from, being very entrepreneur friendly to being more investor friendly, with being able to ask for additional terms and contingencies, et cetera. Right. And then, there's folks that I've talked to that need to exit. And, they're just like, the only way out here will be an exit, and it'll be a little bit of a distressed asset sale. What I don't know is if there's going to be any appetite from all of these larger players in the space, all the usual suspects that would historically be buying assets, because they're all under pressure too, right? So somebody who has got a lot of money on the balance sheet, I think a month from now, when we get more certainty around if and when and how this is going to play out, I think you will find some of the big strategic players sit back and say, okay, so how can I take this opportunity this year to make strategic investments and buy assets favorably? But I think right now, everything's jammed up and closed. So I think the next month is really helping these entrepreneurs prepare for when things open up, and then being ready to strike quickly when those things open up.
That's really good. So give me a rundown, how do you prepare an entrepreneur? What are the mechanisms, right? So that he's going to need to do. So this is a good vein of questioning. I'm sure it's going to be very interesting to lots of people watching. So.
Yeah, so you've been through this before a couple of times, right? So all too well. It's getting your financials in order and getting sort of your story in order, right? I would put into those two buckets. So typically, entrepreneurs may be using some accounting software. QuickBooks might be more robust than QuickBooks, but whatever it is, trying to make sure that you've been really thoughtful around how do you talk about revenue and costs right now, and then forecast those out 3 to 5 years into some kind of credible story, and really fly spec and vet those financials and get that so you could hand that off to a potential investor or acquirer, and you have some credibility there. And you've been there, I've been there before. I'm sure that your number one priority when you wake up every day isn't to have a 5-year plan that's been well vetted. So typically there's some work that goes into that, and preparing the entrepreneur and just talking through reasonable assumptions about how the next 3 or 5 years might play out, COVID aside. And then there's building kind of what I would call a pitch deck. And it doesn't have to be a lot of material, but you talk about what the opportunity size is, why you're uniquely positioned to attack this opportunity. What's your secret sauce? What do you have uniquely about yourself that can uniquely attack this big problem? What's the team look like? How good is the team? Then you layer in the financials, right? Then you talk about how much money you want to raise, and then you talk about use of proceeds. Kind of a flow like that. It's kind of a natural story that you would be talking to someone, over a cocktail at NADA.
Right.
But getting that articulated into a nice, crisp story. And the litmus test is not really a 5th grader, but somebody who's new to the industry and isn't intimate with all the different nuances of automotive should be able to read the deck and read that model and make sense of it without somebody giving them a narrative over top of it. And, clearly with all of that, you want to be sensitive to non-disclosure agreements and not giving away too much information. But if you have your financials in order and you have kind of like the pitch in order, then most of the times then you're in pretty good shape. But I got to say that, most of the entrepreneurs are heads down running their business and probably don't have, refined, 5-year financial projections nor pitch decks at the ready. So I think a lot of the next month will be, for those that are going to be forced to raise money, just getting those kinds of things in order that any investor, be it a strategic investor or a financial investor, is going to ask for, and then make sure that you're not reacting to that and having to do additional work once you actually go to market in a month or two.
That makes a lot of sense. So on that vein, what techs would you feel are going to win besides digital retailing? Obviously, that's the gorilla in the room. We all got it. Everyone's going to at least initially now flood to digital retailing. Had a good conversation with Andy Moss from Roadster and talked to a lot of other digital retailing guys. But what do you think are some ancillary things that will surround that, some tech that will be favorable now to dealers or maybe needs to be built? Do you have any thoughts on that?
Well, I'll preface it by saying, I think of myself as a pragmatist, right? So I think actually all those folks that are opining that this is going to fundamentally change the way consumers are going to shop for cars, I don't agree with. And I know that's going to get me a lot of negative comments maybe when you post this. But the truth is this, car buying hasn't really changed in 100 years. Right? We had the internet, and the internet came along and provide much more information to the consumer. But you think about even the online experience now, typically dead ends in a vehicle detail page where you need to submit a lead, or you still need to pick up the phone. But there isn't really, other than a couple of edge cases like Carvana's done a good job of actual driveway delivery, seamless, everything's online. The car shows up, I sign for it either electronically or in my driveway, and then it's a good experience. And some dealers have replicated that. I think of guys like Brian Benstock, who's using Roadster up at Paragon, right? The Roadster guys, as you mentioned, are all, have been on the cutting edge of this. But there are a number of different digital retailing tools, and we could walk through all of them, but that allow dealers to virtualize some or all of the aspects of car buying. And I think it's great. I don't think that at the end of all this, I think consumers are going to be craving to get back to some semblance of normalcy, right? What was life like before all this stuff? When this does blow over, I want to go back and I want to go to movie theaters. I mean, I want to go out to restaurants at night, and I want to go and test drive cars and interface with dealers. So yes, I mean, this is going to accelerate some segment of consumers to think differently. Oh, wow, now maybe I don't have to go into dealerships and I will want to negotiate online. I don't think it's going to be this big wholesale change in the market. So having said that, I think that, however, I would say that, this is going to prompt some new technologies, right? Out of every downturn, there are great new companies that are built. And I think that part of the, as you know, the digital retailing sort of experience that's fallen down has largely been through electronic contracting, title exchange, presenting the F&I products in a way that doesn't erode dealers' margins. I expect there'll be a lot of innovation in that space that really gets sparked. Probably companies that are already out there, but are just going to get this really accelerated as a result of all that. And I think that they're going to be able to take off, and we're going to get much better presentation. And that may just manifest inside the showroom, where consumers are just presented much more transparent, sort of F&I menus and processes, et cetera, and you collapse some of the historical processes of the stores. Because I can tell you one thing, what we do know is dealers will be looking at any way to take costs out of their P&L.
Yeah.
And that's going to persist. So much more so than a consumer experience change. I think, this is going to come up. Anybody who has innovative solutions right now to help dealers take costs out of their day-to-day operations, that's going to be something that dealers are going to continue to push on, just for the health of their businesses overall. So I would put it into two buckets. One is consumer experience benefits, yes, no doubt. But also on the flip side, how do we help the dealer body, run more efficiently going forward? And any technologies out there that can help dealers with that will definitely have a good staying power after this is through.
Yeah, I wrote something about one of the things I thought was an interesting piece that no one really has talked about with digital retailing is, if we are home longer or we get thrown into home again by, whatever people said, August, September, it's we get another wave of this and we're back into the house where remote employees are going to need to be a more like stable and consistent part of the dealer's workforce. There's no tech to run them and logistically manage them and logistically manage the movement of cars on, let's say I have to take it to your house for a test drive, or I'm doing a home delivery. I mean, me as a previous dealer and desk manager, I'd constantly be like, where's Steve? He's been gone how long? And you have no idea. And I'm asking my other sales guys, and he's like, oh, he's out on a test drive, or he went to lunch. Because we really don't have, besides that desk, knowing where your team is. And when you're in big stores with 30, 40 salespeople and they're all over the place, and you have a big store, it's hard to keep track of them. So wonder what it's going to be like in a new world where a chunk of your workforce could be at home.
Yep.
You know, how we measure them, manage them, and make them effective assets of the organization. I think that's an interesting side. So
yeah, I mean, virtualizing a BDC, for example, like it'd be interesting to see if dealers at the end of this, I mean, the typical dealers that I walk into have like a dark room in the back where they got folks, you know, minding the leads and the internet leads, right, and the phone call leads. But I mean, why wouldn't those people be able to sit at home and plug in virtually? As long as you can, like you said, you could drive accountability and make sure they continue to be productive. I think the benefit of having them in the back room is that you can keep a watchful eye on them. You'll have to be able to do that virtually, but other industries have figured this out. So yeah, I mean, virtualization of BDCs would be a great example, and also be a tremendous cost savings to dealers. So I think there will be interesting technologies like that come out of this. And who knows what they'll look like, but there'll definitely be new companies that come out of this that make dealers stronger and allow them to work more efficiently.
Yeah, look, I'm like you, that entrepreneurial mindset that you're constantly looking like what will be the vein of, you know, these next new companies. What will they need to do? How are they going to impact dealers or consumers to help dealers be more successful in this change? I'm like you. I believe digital retailing. The one thing that did come up, and I'd love to hear your thoughts on this, and this was just after talking to Andy, and I left that conversation. I said, the one thing that I think is unique right now is before, when, let's say you're a dealer, you go to 20 group and everyone says, oh, I'm using digital retailing and it's working. So you as a dealer hop on that bandwagon, right? You're not really committed to it. You're just like, everyone in my group's doing it. I want to do it. And you go back to the dealership, you get your managers and you say, okay, guys, we're going to do this digital retailing, and everyone kicks the thing and hems and haws and says, oh, we're going to lose gross, and like all these exercises we go through, right? And then digital retailing is really just kind of turned over to the actual salespeople or whoever is going to implement it, right? And then that's usually where I always said it kind of falls down because leadership's not really watching it. But in this new world, and this is where I think it's a little different, those people, the actual people that are the doers of digital retailing, aren't there. It's right. The managers who are the doers and the implementers. You know, I've talked to a lot of dealers. They're on super skeleton crews. They only kept their managers. Their managers are responding to the leads. The managers are working the deals. Will this change the psychology that if they do get a little success as a manager, will they be more capable, bigger believers that they feel confident as well to train the salespeople, because now they've actually used it, where before they just go, oh, Steve, you got to go through the training for DR and, you know, let me know how that goes.
Yeah, no, it's a good point. And even more importantly, I mean, the GMs and the owners of the stores are going to be saying, guys, I don't care. You need to adopt this, because if this ever happens again, I'm not going to be flat-footed. We need to be prepared next time. So I think there will be more top-down driving of adoption of these things, and, you know, making sure there's more oversight. So I agree with you 100%.
Yeah, I don't know. I thought it was an interesting thing. So you spent some time recently in that third-party space. What do you think happens to the third-party providers right now? I mean, I always know that, look, they're like any downturn, everyone cuts them first, and then it's like you cut advertising back, you cut your digital spend back. It's like in a progressive, like, layers of onion. I mean, what's going to happen coming out? I mean, I saw the discounts, but
yeah,
what do you think happens in that space?
Well, if you put the dealers into two buckets, as I said, right, the dealers that can't be open right now and can't be selling, why do they need to be marketing? And that goes across all the marketing channels, whether it's cable TV or radio or any of their digital marketing right now. I mean, why market unless you really want to keep brand awareness while people are at home watching TV? That might be a strategy, more like broad brand, maybe talk more about what you're doing in the local community right now. But I don't know that dealers, I haven't talked to a lot of dealers that are spending on that kind of broad brand awareness right now. So yeah, I mean, I think the dealers probably did scrutinize their entire marketing demand gen budgets and have dialed it way back or down to zero. And that's only prudent. For the dealers that are open, it's a little bit more of a conundrum, right? I mean, I think you need to be cautious and surgical around what your message is, so you don't seem like tone deaf and just like, hey, buy a car from me. I think you want to have a message that more resonates with consumers who are cautious, who might need to buy a car because maybe they are working in critical industries and need transportation right now. But I think being cautious. We've seen so many big brands get their fingers burned because they are a little tone deaf right now. I think that's challenging. But I think that the flip side is when consumer confidence starts coming back, I mean, dealers are gonna be like, I need to get that foot traffic now back into my showroom because they're gonna have inventory that they need to move. They're gonna have maybe it's just hopefully it's just the first half of the year that's soft and try to make up for some of that the latter half of the year. So I think the third parties will continue to play a vital role to dealers to generate foot traffic that they can convert into sales. But I mean, I don't begrudge the dealers right now for dialing it way down, sometimes to nothing, because right now, why generate demand when you can't sell?
It's a good point. That brings up, another question, the vehicles themselves, with auctions being now like shut for a while. There's no price demand for these products. There's no marketplace, right? You normally have every week, I don't know how many cars are sold in auction every week. I assume it's a ton, which sets the pricing. We don't have that.
Right.
What will happen to used car pricing, build up of lease returns, build up of the rental car fleets? Wonder what that will look like impacting the used car market in a short period of time once we kind of come back online.
Yeah, so I cut my teeth at Manheim. My first job was at Manheim in the automotive space and spent 10 years at Manheim. So, put that in perspective. There's about 10 million cars a year that are sold through like the wholesale auctions.
Okay.
And so you can kind of think rough math is like close to 1 million a month typically. And that's all dried up, right? I mean, Odessa was literally closed here for a couple of weeks. Manheim stayed open just electronically and was able to offer cars through kind of simulcast and online. But I mean, the operations have been way scaled back. Dealers obviously aren't traveling to physical auctions. They're buying everything that they buy online, and the volume's not there. Again, starting with the consumers, if consumers aren't buying cars, dealers don't need to replenish the cars on their lots, right? Then, to compound that, you've got all these lease cars coming back. I rented ironically enough, like 2 weeks ago, I drove across country from LA to Atlanta when I came home and rented a one-way Hertz car. I went to LAX airport on a Thursday night 2 weeks ago, literally 2 weeks ago. And I got in there, the car, a minivan, wasn't in my spot. Every spot was filled. The cars were overflowing, as you can imagine. Nobody's renting cars. Right. So I went back into the woman, this is about 9 o'clock at night, and said, my car isn't in my spot. And she says, oh, just take anything. And I was like, I'm driving to Atlanta. And she's like, yeah, just take anything you want. I was like, oh, interesting. But I think that they're and then the flip side, and I hate to beat up on Hertz because I know they're under a lot of duress right now. So I turned my car in at Atlanta airport Sunday night, the 5th, right? Today is, what's the date today? The 14th? 17th. Yeah. Every day since, you'll love this, every day since, they hit my credit card for $345, Hertz says. I've had 2 calls since, and both times the person on the phone was very apologetic. They said, listen, we don't have anybody working right now, so there's no one to check in your car. So I'll send a message down to Atlanta airport, and we'll try to get your car checked in, but it's still sitting down there. It hasn't even been checked in yet. So I haven't even got my bill yet, and I'm gonna have to dispute like basically daily fees for like the last like 12 days. And this is probably gonna go on for another week. So it's like, it's just like, this is the state of affairs right now. So all those cars, as they come off, Hertz fleet, they're going to have to go to physical auctions. With no demand for these cars, there's all these off-lease cars coming back this year. The auctions are going to be stuffed full. These poor auction companies are going to have to buy or rent satellite locations just to park the cars.
Yeah.
Right? And we're not going to have demand from consumers, and thus we won't have demand from dealers. So, I mean, the auctions are going to be overflowing with cars that they can't sell because there's going to be no demand. So, I mean, this is all backing up in the supply chain, which means for the consumer that wants to buy a car, they're going to be screaming good deals, either on new cars or used cars. We know, I mean, I've seen JD Power talk about, like, they expect a 7% decrease in used car prices this year. I can't imagine that's the extent of it. I mean, there's going to be screaming deals for people who want to buy opportunistically cars. And I think that we're going to hear stories, like back in the 2008 downturn, dealers that make a mint because they timed the market right. They were able to buy cheap cars and sell them into a strong market. The problem right now is, like, who knows when the market's going to turn, right? We don't know when consumer demand is going to start pulling through these cars, which will energize the average dealer and energize the auction channel. So coming back to where we started the conversation in terms of new technologies, I mean, there are these kind of like companies out there, like I think of ACV Auctions, for example, who are, kind of quote unquote who's quote unquote disrupting the wholesale auction channel. Well, I mean, he's ideally positioned to, like, go out there and, photograph the car wherever it is. It could be on a lot somewhere, it could be a dealer lot or a consumer's driveway, and get bids for those cars. But even I imagine, I haven't caught up with them for a while, but they've got to be jammed up because they're suffering from the same thing. You can only sell a car when you've got demand for cars right now. And the fear would be that the longer dealers sit with no consumer demand, dealers are going to say, no, I'm all good, I don't need cars right now. And then who's buying the auction cars? So I think some of these technologies will come out stronger than ever. Being able to kind of virtualize the sale, inspect cars online, take photographs very creatively, wherever the car actually sits, and merchandise those vehicles and try to find buyers in the nooks and crannies of America where there is actually demand. But, it's going to be interesting to see how this all plays out, because it's all predicated, again, it all flows from when consumers will start feeling confident enough to getting back to either buying cars or servicing their cars.
Yeah, I wonder if someone's going to write, this would probably be that time you really triple down and write a marketplace product to look for anomalies in price to market, right? So look for those spots where, oh, wow, the cars are super cheap in Orlando, yet there's still a strong marketplace in Iowa for this particular that market disparity. It would be interesting. And I know a lot I've seen inside that space, but that might become even more apparent as we go through this and you have this flood of cars coming back into the market. I've talked to Todd Caputo. He's just kind of selling down his inventory. A lot of guys are just like, hey, we're just waiting, and I'm going to sell through what I have at the prices that I thought they should be. But the question is, how many of these dealers will turn around, open their door back, and realize they're, $500,000 underwater?
Right. Or the flip side, they just can't, don't have enough inventory to satisfy demand. I've talked to two of my buddies who have dealerships in Florida here this week, and they're still open for business. I mean, volumes are down, but they're still selling. So to your point, I mean, as opposed to a dealer in some state that can't sell, could they be creatively moving inventory down to the Florida market, collaborating with other dealers, et cetera, to get some of this inventory that would be hot, as it gets warmer down in Florida? I'm assuming, convertibles are starting to get interesting in the consumers, right? That's right. Right. So maybe, there could be some creative solutions to be shunting existing inventory around the U.S. to start to help alleviate dealers to dispose of some of those things. But surely, people smarter than me are already trying to figure that out.
Yeah, listen, you and me both. I always feel like you just get those thoughts though, like, wonder what, where it comes out. Like, as you said, if we go back to the 2008 downturn, some of the biggest technologies came out of that time frame, right? Airbnb, Uber, Lyft, take your pick of companies that exploded when they in growth. So the question, as an entrepreneur, as you have to say, well, what's it going to be now? And I don't believe it's digital retail. I think that's already has been in the motion for a longer period of time. I think there's other things that surround that are going to become highly useful tools that maybe we just haven't seen yet. I don't know. So I wanted your thoughts on that. So.
Yep. No, I agree. And, also just helping virtualize the service experience, right? I mean, many dealers are very, very vocal that they come to your driveway, pick up your car, come to your place of work, pick up your car, service it, bring it back, make it super convenient for consumers. But I think there'll definitely be more of that, right? I mean, there'll be investments in technologies there that help dealers unlock either service and or parts. And I'm quite sure that there'll be new companies next year at NADA we see, we're like, oh, interesting. So those companies got a foothold during this downturn.
Yeah.
Right.
You know, I'm laughing. I think like, are we going to see a whole row of like Clorox 360 and companies that show up at NADA next year?
Maybe. I mean, that's a good point. Yeah. I mean, sanitize the inside and outside of your car, right? With one push of a button or something.
Yeah, like, well, AutoNation has done that for a while. They had this thing called the Clorox 360 machine. I don't know if you've ever seen it. If you go to their website, AutoNation, click on service, they actually have a whole thing called like, it's called, I think, Clorox 360. And it's this Mr. Atomizer that they just hit everything. And it uses like electro something to stick and kill everything. So yeah, I mean, there's a couple things like that. You got to wonder, like, what will happen? Like, is that new protocol? Because you have to think, you know, there's two sides. We go back to stores and we have lots of employees around again. That's a breeding ground for stuff. So what are the new rules around how we interact with our coworkers, how we interact with customers? What needs to happen to put like safety in place where there never was any?
Yep. Yeah, agreed. It's going to be a new normal for a while, at least, while the memory still is emblazoned on our brains of the pain that people are suffering right now.
Yeah. Cause you think about like, okay, my last company, I mean, we had, you know, a couple hundred people in literally on 2 floors, right? Like you get one with Corona, like it would spread. Like,
yes. Yeah.
And the impact that would have on those, like a business like my previous one, it's not good. And I think that's something like, I don't know how we navigate that. That's going to be really interesting. Do we go back to big businesses, or will the remote and work from home grab hold a little bit more? I mean, I think it'll decimate commercial real estate, but on the other side, will it be safer for us? I don't know.
Right. Well, definitely safer, but yeah, do you have collaboration tools, like virtual collaboration tools, to your point earlier? One, you can drive accountability, make sure your employees are actually checking in, are productive, but also just like, I mean, I don't know how you're feeling right now, but I mean, this lack of, with all due respect to you, I mean, this interaction, but lack of like sitting across a table from someone, having coffee, having dinner with friends, et cetera. It's weird what it does to your psyche after a while, right? I mean, and if we're forced to be in our homes for another like 3 or 4 months, I do think like coming out of this, people are gonna be craving like social interaction with folks.
I even saw this is, I will go a little off topic because I think it was just funny. I read a story how Zoom now is like writing code to watch the videos because people are having nude parties on the Zoom platform. And they're like, we can't have that. So they're having to write code to look, I guess, for nudity. So it then stops the Zoom party from going on. Because like my wife, she has friends like all over. So they'll do their social happy hour and sit there and laugh and drink and do whatever and eat. And, you know, everyone's doing that. But I read that article and I said, there's always one person that takes it way too far, what you could do with Zoom. So
hey, that's a new business for us. How about strip poker via Zoom?
Yeah, there you go.
Right? Now you're on. Yeah.
But then you start thinking like all the other stuff. Like I always think like what impacts like concerts, sporting events, you know, travel.
Yeah.
Are we going to want to see, like, even in auto, are you going to get those people that come to the dealership now to do training, right? That are put on planes? I mean, those risks that risk profile is going to change, I think, what business owners do.
Never mind the conventions. I mean, these conventions, be it either NADA or digital dealer or whatever it might be, you know, that was a primary way for vendors to interact with dealers and dealers to find new technologies and discover new technologies. How is that going to play out? Because, you know, heaven forbid that by, you know, next January, we can't all fly down to New Orleans and go to NADA, but imagine trying to conduct NADA virtually. That would be tough.
Yeah. And I mean, let's be honest, New Orleans is like the hotbed.
Yeah,
So
right, exactly.
I don't know if I want to go in there quite yet, man. So
Right, yeah, yeah.
that's like going into the war zone. So I'm like, I don't know. Maybe I'll wait on that one. So,
Sure.
yeah, I don't know. I feel like there's so many interesting things to learn right now out of this that, if we keep our minds open, like what's possible, from a entrepreneur perspective, business owners, from dealer perspective, from the consumer side, I guess this level of uncertainty is uncomfortable, but inside there, I hope we find, I don't know if it's a shifted normal or what comes out of it, but I think it'll be interesting. So.
Yeah, I mean, what we do know is that this won't last forever, right? I think what we do know is the strong will get stronger. Those with strong balance sheets will, as things turn around, be able to make investments in either buying cool technologies and or like for a dealer stocking up on clever inventory right at the right time to be selling back into a strong market. So those dealers that are better able to weather this financially are going to be able to be more opportunistic, like all things in life. We know there's going to be new technologies that spawn out of this downturn, and we'll look back 5 years and say, wow, there were some really good innovative companies that came out of this. And I think we all just need to like hunker down and prepare for some pain in the short term, but just also be prepared that life will get back to normal. It may be slightly different, nuanced, but I mean, get ready for that and I'll prepare for that inevitability and be prepared to like be aggressive, right? Those that one are in good financial shape right now, but also are prepared to be aggressive when the timing's right, are the ones that are going to like, take the predominance of the benefit as we come back to normal.
Yeah, there was a article, I think it was in Harvard Business Review. I'd mentioned it with someone I had talked with where they profiled a ton of companies after the downturn, and the companies that fired people did not return nearly as fast as the companies that either did pay reductions or just furloughed. Like they kept the core staff there because that whole having to rehire, loss of tribal knowledge, all that stuff just impacted them. So, I know dealers are in all sorts of situations right now. Some have had to, term the majority of their staff. Some of, some dealers I know they're paying all their employees still to be home. So you get that whole thing. I feel though that was an interesting thing. It really highlighted that, you'll come out of it faster as you can, if you can hold on to your people, right? That asset. So
yeah, I've always, I mean, you've built a great company in the past. I mean, I've always thought that basically what you're doing is you're building a tribe, right? Especially when you're a startup, you get to pick and choose every member of the tribe and always keep raising the bar on the quality. But when a company is under a certain size, you get that sort of also that allegiance to the tribe, to the fellow members of the tribe, to the tribe leaders, et cetera. I think once you get to a certain size with big companies, typically you lose this. I think this is a great opportunity also for leaders, be it at small companies or large companies, to reinstill that kind of sense of like, trust, high levels of trust and caring for other members of the tribe at the company. And I think probably that's one of the benefits that may come out of this, right? Is like, we'll look at, our interactions with other humans as being less transactional and being more invested in like understanding them. And are you all right? Is your family okay? I really care for you, especially as we come back out of, getting more people back on the payroll. I think people are going to be very, very appreciative of having a job and being part of that kind of community with companies. And so we'll see how that plays out too. But hopefully that's like, we'll have some kind of return to people really appreciating being part of the cultural fiber of companies.
that's awesome, man. That's very well said. I love it. So, well, hey, I really appreciate you taking the time today. It's always great to catch up, and glad you're back on the East Coast now. So still
We're practically neighbors.
I know, still gonna have to get you surfing though, man. I can't believe you spent all that time in Cali and didn't surf. I'm just like,
well, I'm all for the warmer water down in Florida. We'll go to the Gulf Coast and you can teach me.
yeah, we'll get you into the Atlantic. We'll get you into Sebastian or up here, New Smyrna Beach, which is shark bite capital of the world, by the way. But don't worry about that; it's not a bad thing.
I'll tell you what, if I can get you on a racing bike on the racetrack, I will definitely take surfing lessons.
Listen, I'll do anything, man.
All right.
Tell me what you want me to do, and just make sure you don't get me killed. I'm okay. Just, you know.
Oh, we'll get you wrapped up in leather and helmets and gloves.
Sure,
and stuff.
man.
No worries.
Yeah, man. I'm okay with that. Well, cool. I really appreciate it. And here, I'm just going to stop this and hold on one second.